On cue, Doug Flynn joins us with his analysis, certified financial planner, co-founder at Flynn Zito Capital Management. You know, I hate cutting you off, Doug, but if the two presidents come out, I might have to. So consider yourself warned. Yeah, as I said, fresh highs for the year. We're going to flash up some inflation numbers, maybe talk about them a little. I know it says it at the bottom of the screen on the CPI. It's kind of stubborn, this inflation figure, but the market's still looking pretty good. So let's start with stocks. What do you make of this run and then whether it continues?
Yeah, 6 straight weeks of gains, putting us really at year-to-date highs. We're within striking distance of all-time highs, which is really the news to me. The S&P is within 3%. The Dow is within 1% of its all-time high. And so that bodes pretty well on how things have moved. And so now everybody's kind of taking a wait-and-see attitude to see if there's an opportunity to get in if you missed this. Even bonds since late October are up 6%. Just in those 6 weeks. So everything has really been moving. And now we're waiting on this, with the CPI number came out, we're waiting on the Fed tomorrow to see where we go from here.
That number on CPI of 3.1% annual consumer inflation is, you know, we continue the story of inflation kind of cooling off from where we were. Is it still too high? It is by definition for the Federal Reserve. And if so, what will that mean?
Yeah, the 3.1 came in. That's pretty much right where everybody was expecting it. It was down slightly from 3.2. The monthly number ticked up, but the annual number ticked down. That doesn't include food and energy. That's the core number that the Fed likes to look at. That came in at 4%. And the Fed's target, as we know, is trying to get inflation down to 2%. So it is that doing that slow crawl downward. And, you know, the market's basically anticipating that that will continue on and that the Fed is done. And I'm looking past the pause, and they're waiting to hear tomorrow about when they might cut. The market's expecting almost like a 0% chance of raising ever again.
So I have a couple of stories left. There's a news conference about to start. I'm going to pick one. I'm going to pick the baseball one and try to squeeze that in before these two presidents start. We talked about Shohei Ohtani on this show yesterday and this crazy contract that he signed. But I think it's interesting. It was 10 years, you know, 10 years, $700 million and all that. And everybody said, "Whoa, this is a lot of money," and it obviously is. But then the news came out last night that he's deferring almost all of it. He's quote unquote only going to get paid $2 million a year for 10 years. So he's deferring 680 of the 700 million. You're the financial guy. What'd you make of that when you saw it? It's kind of interesting, right?
Very interesting and quite brilliant, if you ask me. He's going to take $2 million a year for 10 years, and then $68 million a year for the next 10 years.
Right.
So that'll be 2034 to 2043. I'll make you a bet, Connell, that he is not a California state resident starting in 2034 when that $68 million a year kicks in.
Right. He wouldn't have, as long as he's not, he wouldn't pay the California taxes. But
not on that. Now, we do hear he makes $50 million a year from endorsements, so he doesn't really need more than the $2 million. But the way it's structured is an average value towards the salary cap of $45 million a year, which is why it's also brilliant, because they don't spend all that money that they're giving him up front. They can use it towards other players to try to make a run. So the present value, if you do it, is really $450 million, but in actual dollars that will be paid out over 20 years, it is $700 million.
Now, the Dodgers, aren't they owned by an investment firm? So it's interesting from that perspective, too, I think, because, you know, they don't have to pay interest on it. So I get it that it's a crazy, crazy amount of money. But I wonder how much, you know, they can invest and make some back and maybe not, you know, net be out as much as they thought they would. I'm sure that's what they're thinking.
I agree. I think that everybody wins. And maybe California doesn't win as much with the way that this is structured, but the teams move on and everybody does pretty well, and they have some opportunity to do some more with it. So it is really interesting and quite different than other contracts that have been out there.
You're probably just angry you didn't end up with the Yankees. We were talking to you about the Yankees last week, and you were saying, "Oh, you know, the Yankees, it's been tough for so many years." Tough. They've won 26 World Championships. Typical Yankee fan. But thank you, Doug, for coming on.
27.
Oh, God, of course. Stop. Doug Flynn with us, our resident Yankee fan, and now kind of baseball salary cap analyst, even though they don't have a salary cap. All right.